Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update. And then a big question is going to be is when are home prices going to bottom out? Now, speculatively, this is everything that anybody says out there. There's no guarantee. There's no 100%, okay? The only thing that we could do is we could go through what happened in history. And the earliest thing that we had as far as a housing bubble goes was in 2008. That's the only reference that we have in order to see how long it's going to go ahead and take home prices to go ahead and drop. Now, home prices have already dropped. I'll show you exactly how much it's dropped in my area here in Los Angeles. We'll go from the high end to the low end. We'll take a couple of examples here. But as far as right now let's go ahead and do our mortgage rate update as of 12/5/2022. 30-year fix will be sitting at 5.61%, 5.03 on a 15-year fix. 30-year high balance will be sitting at 5.72. DSCR loan, which is a debt service coverage ratio loan. This is where you're taking the total income from rental as you're going to offset it with the debt that's going out, which is your principal, interest, tax, insurance, and your other running costs. That'll be sitting at 8.50%. Bank statement loan will be sitting at 8.50%. FHA 30-year fix will be sitting at 5.09%. 7/6 adjustable rate mortgage will be sitting at 6.04%. USDA, which is zero down payment program, that'll be sitting at 5.11%. VA 30-year fix will be sitting at 5.09, another zero down payment program for people who have served as a veteran. And then hard money fix and flip. You see a really crappy house, you want to go ahead and rehab it, you want to go ahead and get it all dialed in, you want to make a little profit on it, you see something, that'll be sitting at 9.75%, and that's what that's for. Now, if you are interested in any one of these mortgaging products, up to 50% commission rebate on purchasing your next home or 0% listing on selling your current home, link in the description below. But let's go ahead and talk about exactly how long do we have to wait before home prices go around, because that's a really important question, right? Because everybody is kind of on the back burner. Total home prices year-to-year sale is down, nationally average 36.9%. Now, whenever, I've said this a million times now, whenever you're dealing with home prices and anything with real estate in general, it always takes some time before the world catches up to the real estate prices, especially now, because what's happening, we had an inventory issue. The inventory issue, now it's increasing. We're about 3.5 months in inventory out from the 0.7 that we were during the pandemic. So what that means that during the pandemic, if we stopped taking listings and new home builders were not building, we had 0.7 of a month, which is roughly about 3 weeks, until we run out of inventory completely. Now we're about 3.5 months out. So that means that if we stop taking listings right now, we have 3.5 months worth of inventory in the future to go ahead and compensate for the buyers that are about to go ahead and purchase. But downtown Los Angeles, this is my area. LA, Orange County, San Diego, San Francisco, California is me. That is what I do. This is my home. This is what I run. I run California. But how much have they dropped? Now, $4.5 million on a penthouse over in downtown Los Angeles. Now, downtown Los Angeles as a whole, it's not the most expensive place, but it's not the most cheapest place. They have all the high-rise buildings over there, but this one right here, this dropped $500,000. Now, the HOA there is ridiculous at $2,400 and $2,401 in monthly HOA fees, which is not by far the worst that I've ever seen. The worst that I've ever seen as far as HOA fees was in San Francisco at the Avery Building at the top floors. I think it was floors 40 and above, which is like $25,000 a month in HOA fee. Here's another one in downtown Los Angeles off Olympic. That's they dropped about $50,000. HOA fees are $2,279 a month. But then when you get into the more reasonable area, this is exactly in my area. This is where I live in Porter Ranch, California. This home right here in Eagle Ridge Lane, $885,000, which is down $110,000 from the listing. $190 worth of HOA doesn't seem that bad. And then we have another one, which is $1.89 million. That's down $108,000. $396 in HOA fee. Now, in my area, and I know these prices, like I talk to my buddies in like Texas, or I talk to my buddies in like Las Vegas or Arizona or something like that. They look at some of our prices, they're like, Jesus Christ, is this really what you guys pay for homes? Yeah, this is a normal for us. Now, your area might be a lot different. Your area might be a lot less. But as a whole, homes are staying on market higher because the interest rates have increased. They're not that bad right now. And I'll show you, as a national average, I am way less than what it is. So let me beat your big bank, okay? That's my little slogan thing. I had to throw that in there. But let me try to beat your big bank. At least save yourself a little bit of money. If I could beat whatever rate that you're getting offered, it's only benefit to you. I mean, I do this anyway, so might as well try to capitalize on it as much as you can. But I'm going to go ahead and we got to look at, see what happened back in 2008 to kind of see, are we headed down this path? Are we going to be in that area of home prices depreciating at the level that it was in 2008? Because it really didn't start in 2008. It started back in 2007. But how much did it drop? How long did it take to go ahead and bottom out? And how long did it take to recover? Well, let's go ahead and take a look at it so you could kind of see. Now, I'm not saying that this is going to be a 2008 bubble. I'm not saying that this is going to be as dramatic as it was back then, but kind of the timeline would only make as much sense as anything in history that we could possibly imagine. Because you can't go back to the Great Depression, because the industry that we're in, socioeconomic, everything, in 2008 is the only thing that we have, like, as far as tech being so big in the whole economy, right? As far as everything that we have economically right now, that's the only thing that we could kind of get, you know, apples to apples type of scenario. We can't go to the Great Depression because the economy there wasn't the same as it is now. Population was totally different. So that's the only thing we could go ahead and compare to. So let's see what the prices were then as a national average, how long it took it to go ahead and bottom out, so you could get a kind of an idea of where we're going to be at, how long it's going to take, and then whenever you're ready to go ahead and buy or sell or whatever you want to do, this could help the decision that you're going to go ahead and make. But let's take a look at it. Now over here, we're going to go ahead and start, like this is 2001, we're going to go over here. So the decrease in prices, which relatively speaking, you could kind of say that we're in May of 2007, where we're kind of like at the drop zone, right? We're kind of at the area of where we're dropping right now. So the median home price back in May of 2007 was 217,000. So you could kind of relatively say that that's the peak of our market. The peak of our market will probably, let's say it's, I don't know, let's say it was roughly about let's say about 6 months ago, 7 months ago. Let's just do January 2022. What is this? Commercials. So 2022. So let's go ahead and say that 2007, somewhere around March, is going to be the decline. So from 2007, and then you go all the way down to August of 2008 is when everything kind of went haywire. Then it kept dropping, okay? So we could kind of say, you know what, we're still not at the moment, we're still not at the bottom or where things are going to go ahead and downfall. Now, we do have another Fed interest rate that's going to go ahead and increase. To be honest with you, everything in the whole entire world of real estate doesn't make any sense right now. But we do know one thing for sure is that home prices are dropping. We do know that year-to-year sales are decreasing. But it took from 2008, prices are dropping. It didn't take until January of 2012 for us to go ahead and bottom out. So to kind of put it in comparison, to kind of like let you know exactly where we're at, this is going to be, like I've said in a million one of my videos before, this is kind of a slow bleed. That's all we are. Everything with real estate, it's a slow trickle effect, and it's just going to depreciate as long as interest rates stay the way that they are. Now, do we anticipate interest rates decreasing again to where it was? No. That will be, if interest rates decrease to a level that it was 2 years ago with this crazy pandemic thing, we're going to be in, it'll be a vicious cycle. It'll be the cycle that we've been in every decade since the history of real estate. It just, everybody does something stupid, then they want to go ahead and correct something, and then they want to go ahead and compensate it by lowering interest rates. And this has been a historical thing. It's always happened. Hopefully it doesn't happen. It's not going to happen for a while. It's going to be at least another decade before interest rates start going to those, let's say, those threes and somewhere around there. It's gonna be a while. We get comfortable with the 5, 6, 7s. We might even get to the 10s. It wouldn't be past. I wouldn't put it past anything or anybody to say that it's going to be in the 10s. And then once the 2012 hit, then we started increases. So to get back to this equilibrium, right? To get back to let's just say July 2007 to $216,000. Roughly medium home price, it's going to be about It took, let's see, 200, there you go, 216 of April 2000, March 2016. That's almost 10 years before we got back to the average that it was back in 2007. So let's go ahead and stop this recording. We're going to go ahead and minimize this. So to answer your question, when are home prices going to go ahead and bottom out? It's going to start taking a dump, I believe. We're in the slow season. Right now, we're in December 5th, 2022. We're going to start getting a hit maybe because this is our slow season. November, December, January is typically, in the world of real estate, it's our slow months. Now, with the home prices decreasing, one of the biggest thing is what's a big problem that's going to happen, especially for you that's actually going to start selling your home, is you're going to have something that's called an appraisal gap. You're going to go ahead and put your house on the market, and then your house on the market, because the comps are going to equal the value of your home, right? The comps in your area are going to equal how much you're going to be selling your home for, because if somebody puts in an offer at, let's say, your house, relatively speaking, just for example, if you listed your house for $1 million and then the appraisal comes in at, let's say, 900,000, now what you got here is an appraisal gap. Now you have to figure out what you're actually going to do. Now the more people are going to start decreasing the value in their homes, and the more that they're going to start decreasing the total sales price of their home, is the less value you're going to go ahead and have. Now this is why this is a trickle method. This is why we have to wait, and it's just an ongoing thing that's going to keep on going. But that's going to be your mortgage rate update. And if you like the content, please consider liking, subscribing, commenting, all that other good stuff. Up to 50% commission rebate, 0% listing on selling your current home, or any mortgage assistance. Link in the description below. Until next video, guys, I really appreciate you watching.